It's my honor to announce the next keynote coming up on stage. We'll have Ronald Richter, the Regional Director of Bitwise Europe, and he'll be speaking to you about bridging traditional finance and innovation. The impact, the impact of crypto integration on investment portfolios. Please put your hand together for Mr. Richter from Bitwise.
Good morning. Thank you, everyone, for being here and listening to this panel. You have a lot of stuff to go through, so thank you very much for sticking around. And I would like also to thank the Crypto Valley Association for the opportunity to be here, and also Città di Lugano for their big help in organizing this event. So, this morning you have seen and listened to a few panels and presentations. You have seen and heard that crypto is here to stay, and that you cannot ignore it anymore. So you must invest. You've heard that, for instance, companies like BlackRock have introduced are introducing now Bitcoin into their portfolios. So what's next? So I am here just to explain a little bit the impact of an investment onto a traditional portfolio. But first of all, obviously the usual, there is no guarantee. Past performance does not, obviously, is not a guarantee of future performance. First of all, a quick word on Bitwise. For those who don't know who Bitwise or what Bitwise is, we have launched or created the company in 2017. We consider ourselves a pioneer in the space. We are a group that is 100% specialized on crypto, so we do only this, and we cater to institutional investors. As said, we are there since 2017. We have 100 employees across the globe now, since last year also in Europe, through the acquisition of ETC Group. So 100 plus employees across San Francisco, New York, and London. We have 31 products. So what do? We are an issuer, an ETF, an ETP issuer. We also have Alpha Strategies products, so something more dynamic and more actively managed. And we also have staking solutions for institutional investors. And last but not least, we are quite proud of that figure and obviously trying to grow it. It's, as of today, around 12 billion assets under management, so which makes us one of the largest crypto specialized asset managers in the world. So as said, talking about integration of crypto into portfolios, does it feel like this, like our friend Wile E. Coyote? Is it worth integrating crypto, or does it feel like you are jumping into the void without a parachute? So we'll find out. I have, as a caveat, most of the metrics and example used are using Bitcoin to make it simpler. We're not going to go into all the details about the other cryptocurrencies, but as also was said in the preceding panel, Bitcoin is one of the most used cryptocurrencies, so let's just focus on that. First metric, performance. Here you can see this has been used quite a lot. Bitcoin has been one of the best performing assets over the last 14 years. Obviously, it has had some corrections, some deep corrections, but on a cumulative basis, Bitcoin has been, and with other crypto assets, has been the best performing asset class since 2011. So, from a performance perspective, if you missed out on that, you're having a problem. However, those returns come with a lot of volatility. On the left, you can see a graph. There is the volatility over a few years of Bitcoin and Ethereum against other asset classes. In situations where you have, for instance, the COVID crash or other environments that are a bit more risky, You can see that the other asset classes are behaving also with high volatility. So in general, volatility is obviously high in crypto, but it is comparatively acceptable and getting more acceptable. On the right, you have a graph on Tesla, Nvidia, and Meta, their respective volatilities. People use the Max 7 as the best proxy to a crypto allocation. And here you can see that, for instance, the green line is Bitcoin. You can see that Bitcoin is less volatile than some of these stocks. And if you look also historically, who hasn't invested in Amazon in the early days? The behavior and the look of the pattern or the graph of Bitcoin's volatility over the time is resembling very much what Amazon looked like 20 years ago. And the volatility is decreasing over time. Along the way, it's getting more and more adopted. We can see that the volatility is going down. And on the right, you have graphs that show the distribution of returns after each halving. And we are getting to a point where those extreme returns on the right side and on the left side of the graph are getting shallower, which means that those extreme bad returns are getting less and less, fewer and fewer. I think most importantly is Bitcoin and crypto assets have become an asset that can diversify a portfolio. Their behavior in terms of performance is completely different from the rest of the asset classes that are around. So if you just take the example of Bitcoin, look at the correlations, 0.12 against equities, 0.1 against the S&P, against gold or bonds, very low. So Bitcoin and crypto assets have really a place to be in a portfolio because they behave completely differently. What does it do in terms of performance? You have on the first line a 60-40 portfolio without Bitcoin, and then the examples with Bitcoin inside, 1%, 2.5%, 5%. You can see returns increase dramatically, and interestingly, volatility does not increase that much, and drawdowns also stay quite limited, depending on how much crypto you integrate. This is just to show a bit what the contribution of a 5% allocation to Bitcoin does. Over that period, from 2017 to 24, 100% win rate with maximum contribution of 47.6%. So, positive. Conclusion, it's positive. And if you look at risk-adjusted metrics, we have, a lot of you or your clients are looking at Sharpe ratio and Sortino ratios. Here, we go even up to 12% to optimize the Sharpe ratio. So, quite interesting. If you replace bonds or equity, you can see how the Sharpe increases and improves. And on the right side, you have also the Sortino ratio indication, like with the Sharpe, an allocation, increasing allocation increases the Sortino ratio. Last word on rebalancing. We have found out that if you rebalance monthly or quarterly, it gives you the best results. Above that, it will start destroying the risk profile of the portfolio. So finally, you or your clients, what will you do? Will you adopt the same approach as this investment committee, just ignore it? Or can't you ignore it and just embrace it? Like the other panels have said, or the other keynote speakers said, we can see you have the ETFs who are growing very fast in the US, strategic reserves on Bitcoin. You have countries embracing it. You have companies, treasuries embracing it. So we think you cannot ignore it, and you have absolutely to look at this. So if you are willing to have this kind of discussion and walk with us, don't hesitate to contact us. And here you can follow us on LinkedIn or on our website with research. And if I can still not motivate you to talk to me, I will bribe you. We have some Bitcoins available here today. So come and talk to me and we'll hand some of these out. Thank you very much.